All right, good morning and welcome back to another episode here on the Dividend Dogo Show. This is the weekly portfolio review, and we're going to dive just straight into it this week. I hope everyone has had a pretty fantastic week. The markets were kind of even most of the week, at least for my portfolio. This mainly is because there was a little bit of a fall off with VST that you'll see here. It dropped down about $3,000 this week, but the other sectors definitely picked that up. So overall, most people should have had a pretty good week this week. So I do want to dive in. The portfolio was up about $1,851.72, and then I earned dividends this week of $55.24. You can see that the portfolio is pushing all-time highs again. This is primarily off the back of a pretty hefty deposit and purchases that I made this week. So let's go ahead and dive in. If you've been following for any length of time, you will immediately notice where the buys were. Maybe not immediately, but pretty quick. You can see that Lowe was down a little bit this week, but Home Depot was up 4.45% this week. Holy cow, that's pretty crazy. Lowe's was up I have to double check, make sure that I'm on the 1 week. Lowe's was up 4.27%, and Costco was up 6%, 6.79, almost 7% this week. Target was up 4% this week. The consumer pie was just smashing it this week. Holy cow. You can see my buys. I brought up the Lowe's pie and the Costco pie to just over $10,000 in each one. I'm going to next work on bringing Target up to that mark as well. That's kind of where I want those to sit for a little bit. I will eventually add a little bit more to Costco, and I'll explain why I'm going to slow down on buying Costco right now, at least for the near future. The utilities pie, you can see VST came down about 2.9% this week. Overall, it's still doing pretty good. You can see it's still up about $7,000 or 8.6%. Now, the majority of this position, I did hold this last year. I started buying this in August. August 8th is when I bought my first little tranche there of 1447, and then I kind of added to it, and then it just stayed stagnant for a little while, and then it started dipping in February, and that's when I added a lot of money. So the majority of the money that I put into this has not been in this position for all that long. Do I expect this to go too much higher than like 10% for this year? Depends on when they do those buybacks. If it does, it might go up a fair bit. I do want to talk about when I would potentially exit that position. I think that if it pushed up close to about $27, $28, that's when I'm going to start reevaluating it a little bit, because I am significantly overweight for the amount that I want in that particular one stock. The reason that I went so heavy is because I felt like it was a true value play, and it could really pick up the portfolio overall. And I do want to see, so I probably wouldn't sell until after the February timeframe, when we see what the dividend raises and how they kind of stick to the plan of the share buybacks and everything, how that kind of plays out. So it's not like I'm going to sell that anytime soon, unless it just magically spiked to like $30+. If I doubled up my money on that stock, I would probably sell 50% of it and drop it into SCHD right away. You can see, let's go back to the 1 week. Healthcare was down just a little bit, and then finance was up a pretty nice little chunk there. JP Morgan, I believe, had earnings this past week, and it was pretty solid. Bank of America also being pretty solid there. I did not go and see if there was any news on Hingham, but overall this position's still doing pretty well, because that's a very new position for me, and it's still up about 14.4%. Then from finance, we've got the real estate pie and industrials. Those are doing both just kind of sitting there. Real estate's doing pretty good. Industrials just kind of stayed even for the week there. The Como Money pie was up about 1.39%. I believe that's all pretty much. No, it's actually pretty even. Berkshire Hathaway was up just a little bit, and SCHD. Now, Berkshire Hathaway is something that I've just always wanted to own. This is a primarily dividend-focused portfolio, but there's a lot of value to this company, even though it does not pay a dividend. I believe that this is going to perform very well for me over the next few years. And eventually I might sell it and roll it into SCHD. We'll see how the time goes. Now, energy was up about 1%. I have not added to energy in quite a while. I should probably dig into that a little bit more and see what I can pick up for bringing up the dividend payments for the energy pie. The tech sector, I believe that's just Microsoft and Apple. I trimmed that down pretty significantly. Overall, these were both just solid performers, but we hold both of these pretty significantly in our 401k funds. So I've tried to kind of avoid the tech sector for the dividend growth portfolio because of that. I did have quite a bit of money in Apple, but I rolled that into VST, so we'll see how that performs. So far, it hasn't really worked out that well, but it's a learning experience for this portfolio. Monthly dividend stocks were down just a little bit. So as you can see that there was some money that came into the portfolio here, and I went ahead and did two pretty big buys. We've got some dividends that rolled into that, but on the 18th, I did these two buys, Lowe's and Costco, and I did 6,600 of Lowe's and 3,500 worth of Costco. Primarily, I wanted to bring Lowe's up and talk about it briefly here on the channel. I do want to go back so you can just see the overall gains here. We're crossing over this threshold. I believe this week we will be at over $35,000 in earned income. Leaving the month of October, that's going to be absolutely fantastic. And the market gains were doing fantastic for all time. But overall, let's jump into Lowe's. And why do I feel like the stock is going to be pretty fantastic? Well, first off, they pay a very low dividend. Overall, this is a dividend grower. The EPS is 11.35 on Seeking Alpha, and already this year alone, it's up 42%. And does it have room to grow? I absolutely think so. The dividend side of this play is pretty amazing. There's very low short interest on it. When I'm looking at this, it's got a dividend yield of 1.4%, which is really low. It's one of the lowest ones in the entire portfolio. However, the payout ratio is only 28.19%. Now, ideally, they're dividend king. They've been growing this dividend for 58 years, and their 5-year growth rate is 17.32%. So if this continued on this trend of a double-digit growth rate for the next 10, possibly even 20 years, this dividend yield for me is going to grow and compound into something that will be pretty significant over the next 20-year time frame. Now, I'm in my 30s, and I have quite the horizon in front of me to build this portfolio and have these dividends be compounding and being put to work. So basically, I'm looking at this as this is both a value play from the earnings perspective, but also from the long-term dividend growth perspective. So I did these buys before the ex-dividend date to make sure that we were in there for the dividend coming up. And what is that? Just a couple weeks actually, on the 3rd of November. So overall, I think Lowe's is a pretty high quality play. I think that it's significantly cheaper to buy right now than Costco or Home Depot, but I do still like both of those stocks. So looking at this rate, looking at Costco, you're looking at a PE ratio of 39.82 compared to 20 on the PE ratio of Lowe's. So Costco is a very expensive purchase, and you can see it's already gone up 27.92% this year alone. They also pay a very, very small dividend. They love to pay out special dividends, which will be fantastic if they do that. Now, the dividend growth rate is listed as 0 in here. I'm not sure that that's entirely accurate because of the fact that I know they did do that special dividend payment. So it is kind of deceptive, and you have to be very careful watching that. Now, they do have the low payout ratio for Costco as well, and they do have the double-digit growth rate for being a long-term grower. And I truly do believe that Costco has the opportunity to keep growing that dividend and expand. We just saw the opening of the Eastern stores with China, and we're getting more stores there. It was absolutely slammed for days. They had police on site for parking, and it was just wild. So I believe that Costco, even at this price, 10 to 20 years from now, is still going to be a significant increase. Overall, I still like the stock pretty solidly as a purchase, but it is an expensive stock. There is no debate about that. It isn't a cheap investment. It is very, very expensive at these prices. Now, I wanted to get my position up to the ballpark range of right around 10 grand. And I'm probably going to leave it there unless we see any kind of significant dip. Then I will likely be picking up more Costco. The other stock that I wanted to take a look at here, and because I haven't really talked about it, I've just kind of held it for a significant amount of time, is Target. Target is one of my top performers. When you look at this slice, you go in and it's all the way down here. I only put about $4,000-ish into Target, and it just blew up. Like, if you look at the price that I have, my average share price is $110, and I started buying Target when the portfolio opened with a tiny buy of $162, and then I bought about 3,000 or so, 3,800 in October of 2019. And you can see it has this roller coaster of a ride, but it climbs this mountain, and it's just amazing. I do wish that I had put a little bit more into Target, but I still look at Target and I see it as a potential buying opportunity. Again, these are low yield dividend companies. These are growers. These are stocks that I believe that you can hold on to for quite some time. Now, you can see in here there's some news articles that say it's a sell. I don't really know about that. Look at that forward PE of 19.69. The EPS of 13, and it is absolutely looking fantastic. When I look at this from a dividend perspective, this does only have a 5.225 year growth rate, but it does have a consistent 53 years of growth and a pretty low payout ratio, so they have some room to expand that dividend going forward. Now, they're currently paying out about 90 cents per quarter and a total dividend of $3.60. But overall, I think that there is a potential for still purchasing and building up this position. So I'm going to be looking at mainly stocks going forward through the end of this year that are somewhere in a PE ratio of around 24 or less, and that have pretty high dividend growth rates and dividend growth potential, meaning that their dividend payout ratios are somewhere around 30 or 40 or less. I think 40 or less is pretty solid for most companies to be able to continue to grow and then kind of go from there. I do want to just look at VST real quick, and let's look at their dividend overall. Now, they were a spinoff. They did go through a bankruptcy, so I consider the dividend growth on this company as it is a risk, right? But overall, they have pretty high cash flow and the ability to pay off and raise the dividend, buy shares, and do potential growth plays going forward. Overall, you can see it's been a very, very rocky time for this stock. It goes up, it goes down pretty consistently. If we're looking at just year to date, it's still dropped about 2.8%. I do believe that can come up, especially with them doing the share buybacks. Now, the information for PE and EPS, this is affected by the Uri winter storm. So if you are looking at the stock, you really do need to dig into the details of what happened here over the past year and look at what happened in February and understand the dynamic of that. Now, one of the other things that I do want to go ahead and mention with this stock is that with the announcement of that buyback, they are selling preferred shares to do about half of that buyback. And what that means is that they're going to be offering high grade investors and investment firms, hedge funds, stuff like that. They're going to be offering them very high dividend yield stocks for that. And they're going to potentially, I believe, buy those back through the preferred share offering, and over time they'll buy those back, and then those investors will have been paid out for years, those high dividends. So I do expect that will have a slight impact, but I think that the share purchasing will raise up the value of the stock overall, and I do believe that they are going to provide a pretty solid dividend increase going forward. So again, I do want to thank you all for watching this week. I hope that my journey here on YouTube is bringing you some insight into what I'm doing and how I'm structuring my portfolio. I'm doing a lot of high quality blue chip buys, and they're expensive, and it's hard for new investors to do those and stomach the fact that they're spending almost $400 for a share, and it's tough. And I know that a lot of you who are watching are just starting out with your portfolios. You do want to look at where you can get your value plays in, and you do want to look at things like the price to earnings ratio, the revenue growth, the cash flow overall. You want to look at the stock and see where is this going over the next 10-20 years, especially if you plan to hold it for 10 to 20 years. And you look at a stock like Lowe's and you see over the past 10 years that it's grown 933%. Can you imagine having bought Lowe's at a price tag, just in 2011 at $23 a share, and be looking at it now? That's just absolutely wild. Absolutely wild. So getting in stocks is what's important, and holding on to these high quality companies, letting them pay you out and reinvesting in them is the important message of this journey. And I hope that I have inspired some of you to go in, look at some of this information about stocks, do your own due diligence, look into things deeply, and see where it fits for your portfolio before you purchase it. Don't just blindly go buy index funds without knowing what's in them and what you're going to be paying to maintain that. What's the expense ratio of those stocks? Thank you very much for watching. We're closing in on that 1,200 subscriber mark, and I'm absolutely loving that. Thank you to everyone who comments and subscribes, and I will see you next week with another video and probably some more stock purchases. Dividend Dogo signing out.